Welcome to this video. In this video, I'm going to be doing a stock analysis of Foremost Clean Energy. So if you like this video, please don't forget to leave a like and subscribe. But of course, remember this isn't financial advice. This is built for entertainment and educational purposes. Now, what does Foremost Clean Energy do? Well, they're an exploration company for lithium and uranium, and as you can see, recently have exploded quite a lot. As you can see, in April it was trading below $1. Now it's all the way up in 7.5 CAD. That is Canadian dollars. And you might be thinking, well, why is it so high? Well, that's because the United States and Europe recently has been talking into exploring nuclear energy a lot more than previously. Countries such as Denmark are even opening the ideas to get nuclear power plants, something that has been illegal until last week. So it is quite interesting to see how Europe is turning on the energy table. That's also because, of course, they want to get rid of the Russian gas. Now, I would say be quite careful with this company as they don't make any real money at all, given they explore and they don't produce anything yet, so be very, very careful. But as I said, they have an option to buy some land with it's estimated to be a 70% chance of uranium. So if that's true, they're going to make a lot of money. If not, well, then they're not. And recently, it has boomed quite a lot. As you can see here, it boomed. That's right now. But then recently as well, as you can see, boom, and then it fell down. And it boomed and it fell down. So be quite careful with this stock because if you don't get in on the boom, it's just going to tank and you're going to sit on a huge loss. And previously, this has boomed and busted quite a lot of times, so be very careful with it. As well as here, as you can see here, it was a reverse split, which means if you had 50 stocks, you would get a single stock. So be careful, as a lot of people are sitting with huge losses on this stock, and if they bought in the previous booms. Overall, long time, it hasn't really changed that much from the start of its IPO, but that is 13 years ago. But overall, recently, it has had a quite rough, as you can see. Back in 22, it was trading up in 21.6 compared to now, which, of course, 3 times what it's worth now, so be very, very careful. Now, currently in the RSI, as you can see here, we're also trading very, very high. As you can see, we are an overbought territory, and we have been quite a lot so recently, which shouldn't surprise you given what a steep turn curve we've taken here. As you can see, we also saw that right here back in January, where it rose all the way up here to 3.6, and then it fell right down back to 0.9. So be very careful, as chances are it might be smaller that it just takes a huge, huge loss. But overall, we are in the overbought territory on the RSI, and of course, if you don't know what the RSI is, that is the relative strength index. So if you're below 70 but above 50, this means you're up here, which is the upwards trending channel, which means the chances are you're going upwards. If you're below 50 and above 30, this means you're in the lower channel and chances are your stock is falling. Now, if you're up here, you're overbought, as I said, but if you're down here, you're oversold, which is the opposite of overbought, of course. But even though that sometimes it looks like we are overbought, as you can see here, it still increases, and sometimes when it's oversold here, we still fall. So, of course, be very careful. As you can see, currently they don't have a price to earning because the company is so small, so there's not really any analysis done on this. And they don't pay out any dividends here, as it says, but that's actually wrong. They did pay out this year 8.36 percent dividend, which is 0.5 Canadian dollars. So I don't know why TradingView hasn't updated that. But as you can see in the annual earnings, they don't really make any money. They spend a lot of money, but that's because they have a lot of free cash flow. And of course, when they're an exploration company, that is just the way it is. Just to see here, the financials is completely empty. On the performance of the stock, as you can see, if I go all the way back to 2013, as you can see, sometimes it booms and sometimes it busts. So you can see 2017, 900% up, 2016, 400% up, this year alone, 262% up. So overall, it's crazy volatile, as you can see here. But then you can look at some of the years we have. 19 down by 50%, 22 down by 40%, last year down by almost 40%. So just overall, it's either you win huge on it or you lose hugely on it. I can't tell you if it's going to increase more. I wouldn't touch this at all because I just think it's too volatile. And given the fact that it has risen for over a month straight, I just would be wary. But of course, then we look at years like 2020, 2017 and 2016, where we see over a longer period of time it keeps on rising. But I would be very, very careful on a stock like this. And the technicals for this for the day is a strong buy, which shouldn't surprise you. And for the month as well, it's a buy. Again, shouldn't surprise you at all. As you just see this, it just keep on going, going, going. And as you can see, they only have 2 employees registered, so it's quite an interesting company to say the least. Now that was my analysis on Foremost Clean Energy. Now if you want me to make any other videos on any other companies, please leave them in the comment section below. I always check them out. Have a nice day.